Welcome back to Rekt Radio, the only show on the airwaves that understands that a little bit of turbulence is just the feeling of breaking through to a new altitude. I'm Sunny, and folks, the air up here is getting wonderfully thin.
And I'm Cole, here to provide the oxygen mask when the cabin depressurizes. Sonny, that's not turbulence you're feeling, that's the engine sputtering. Let's try to find a place for an emergency landing before the wings fall off. What's our flight plan to Fantasyland today?
It's not a fantasy, Cole. It's a destination, and we are right on schedule. The biggest news isn't just a number on a screen, it's a fundamental measure of the network's true proven value. For the first time ever, Bitcoin's realized cap has soared past $1 trillion.
Oh, here we go. Another vanity metric wheeled out to justify the unjustifiable. Realized cap. This sounds important. Do you want to explain to the people at home what fresh-baked piece of statistical nonsense we're celebrating this week?
I would love to, because it's one of the most honest metrics in all of finance. It isn't like the normal market cap, which just multiplies the current price by the total supply. The realized cap values each Bitcoin at the price it was last moved. It's a measure of the total capital that has actually been stored in or has paid into the network. Reaching $1 trillion means $1 trillion of conviction has been deposited into Bitcoin over its lifetime. This isn't froth, Cole. This is the bedrock.
Bedrock? It's a tombstone. You've just perfectly described a lagging indicator of how much money people have sunk into this thing. It doesn't tell you if they're happy about it, it just tells you the aggregate cost basis. $1 trillion of other people's money is now trapped, with a huge chunk of it likely being held at a loss by people who bought the top of the last cycle. You see $1 trillion of conviction, I see $1 trillion of digital baggage, waiting for a chance to break even so they can finally dump it. It's a measure of past euphoria, not present health.
But the health is undeniable. You can't ignore what this signifies. It shows the network's incredible resilience and growth, and it's fueling a massive ecosystem-wide rally. The capital isn't just sitting there, it's overflowing into the rest of the market, breathing life into promising altcoin projects. It's a sign of a risk-on environment where confidence is so high that investors are exploring the entire vibrant landscape of crypto innovation.
A vibrant landscape? Sonny, that's not confidence overflowing. It's greed boiling over. It's the classic sign of a market top. When the gains in Bitcoin start to feel boring, the hot money sloshes into vaporware and dog-themed tokens in a desperate search for a 100x return. This isn't a healthy expansion. It's the final frantic stage of the party, where people start dancing on the furniture. The altcoin rally isn't a sign of a strong foundation. It's a sign that the foundation is being abandoned for reckless speculation. It's the prelude to the entire market getting wiped out.
It's not reckless if it's backed by strength, Cole, and the strength is coming from the core. We're seeing huge walls of bid liquidity stepping in to support Bitcoin's price. Every time there's a small dip, buyers are rushing in with massive orders. This isn't just retail FOMO, these are significant players building a solid floor under the market. This kind of deep liquidity is what analysts give the confidence to start talking about real, substantial price targets. We're not talking about a little bump, we're talking about a potential run to over $100,000. One target even puts it at $113,000.
Oh, I'm sure they do. It's amazing how these fantasy price targets get more and more absurd as the price gets higher. Let me tell you about bid liquidity. It's like a mirage in the desert. It looks solid from a distance, but the moment you get close, the moment the market actually needs it, it vanishes into thin air. It's called spoofing. Whales flash huge buy orders to create a false sense of security and lure in optimistic buyers, only to pull those orders and dump their holdings to second the momentum shifts. That 113,000 target isn't analysis, it's marketing. It's a carrot on a stick for the retail rabbits, and we all know what happens to the rabbits.
It's not a mirage when it's confirmed by the charts over and over again. This isn't about one whale, it's about a consistent pattern of accumulation. This is the market preparing for its next major leg up, building a launchpad on a foundation of real capital. But I know you, Cole. You won't believe me. You won't believe the fundamental story of the realized cap. So let's do what we always do. Let's pull up the cold hard data from TradingView and look at the technicals.
Yes, let's. Let's consult the oracle and see what prophecy of doom it has for us this time. I'm sure you'll find a silver lining in the storm clouds.
There are no storm clouds, Cole. Only the beautiful, powerful engine of a bull market firing on all cylinders. I've got the daily chart pulled up right now, and the overall summary is a crystal clear buy. But let's dig deeper. Let's look at the indicator you love to hate because it shows the undeniable long-term trend, the moving averages. They are screaming strong buy. Not a whisper, not a suggestion, a scream. This is the deep, powerful ocean current of the market, and it is pulling us into uncharted, profitable waters.
You and your ocean currents. You'd happily sail right into a whirlpool as long as the initial current felt strong. You're looking in the rearview mirror, as always. The moving averages tell us the last few weeks have been great. We get it. But what about the check engine light that's flashing on the dashboard right now? Let's look at the oscillators, the tools that measure the current health, the present momentum of the market. What do they say?
Neutral, exactly. And that is the most bullish signal on the entire page. I knew you'd bring this up.
How is that possibly bullish? I swear you could see a massive sell signal and call it a discount opportunity. Neutral means the momentum has died. The buyers are exhausted. They've pushed and pushed and now they're out of breath. You have a strong buy trend from the past running head first into a brick wall of neutral momentum in the present. It's a picture of a trend that is about to die.
It's not dying, it's reloading. It's the perfect combination. The strong buy on the moving averages confirms the primary bull trend is powerful and intact. That's a fact. The neutral on the oscillators shows that the market is taking a healthy, controlled pause. It's consolidating its gains on top of a confirmed uptrend. It's a coiled spring building immense potential energy before the next explosive move. You get the long-term trend confirmation and a perfect entry point during a breather. This isn't a stall, Cole. It's a pit stop, and we're about to come out with fresh tires and a full tank of gas.
You call it a pit stop. I call it running on fumes. That neutral signal is the market telling you it has no conviction to push higher. It's a stalemate. And when a stalemate happens after a massive run-up near all-time highs, it's not a launch pad, it's a cliff's edge. The buyers are gone, Sonny, and all that's left are the optimists looking at the past, about to be pushed over by the slightest gust of wind.
That's all the time we have for this episode of Rekt Radio. I, for one, will be enjoying this beautiful pause and the incredible $1 trillion foundation we're building on. This isn't an edge, it's a new, higher plateau. Stay bullish.
And I'll be reminding everyone that plateaus are just mountains with their tops blown off. Be careful out there. You've been listening to Rekt Radio.